Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Tuesday, September 21st, 2021. Want to do a brief update on the broad markets, talk a little bit about treasuries, just incorporate that here with the analysis on the broad market. The usual stuff, the VIX, crude oil, natural gas. I want to do an update on the AMC short trade. And then a couple, time permitting, I'd like to just hit on some of the precious metals, including platinum and palladium, in addition to gold and silver. So if I can pack that all in there, I'll do it. If not, I'll truncate the video, cut it off, and then do the metals in a separate video here. All right, I just want to point out that starting out here with Treasury bonds, TLT, this is the long bond ETF, 20 to 30-year bonds. It's so far not much of a movement in TLT recently, especially considering the big down day yesterday. And all that says, it's you want to call it this, you can call it a little bit of a sign of non-confirmation for the bearish case. In other words, smart money, the institutions didn't flock into treasuries yesterday. They haven't been flocking in. Often I'll look at treasuries and you get a kind of a heads up if treasuries are rallying in advance of a stock market correction. In other words, while the market's still moving up, getting ahead of itself with sell signals pending, then that helps to confirm it. So it's again, a sign of non-confirmation doesn't mean that can't go down or won't go down. It would give you an extra check mark if we had that. So I'll continue to monitor treasuries, and again, you can see I boxed in that range right there. There's a little bit of resistance here, and then you have a reaction high above there. You could even put a downtrend line like this somewhere in there, but I think a pop above 152.62 would be indicative of give us a little bit of a yellow or red flag showing the institutions are moving into treasuries. And that's not the case right now. Also, keep in mind, I've said this for a long time, the Fed has completely destroyed the mechanism of price discovery by all outright unprecedented manipulation of interest rates, both short and long term, with short term holding the Fed funds rate down to zero, and longer term making purchases of long-term bonds. And so it's really you're not giving us the clues that it used to give us yesteryear. I'm talking treasury bonds, that is. But it's worth watching. And here's IEF. You also want to watch the 10-year. IEF is the 7 to 10-year Treasury bond ETF, so you're really targeting that 10-year range. And you have this little bit of a pattern right here, a little minor downtrend line, support right there. And that's what it looks like. Back here we had a sell signal. There was a nice clean wedge, negative divergence, and we broke it. And been moving mostly sideways, so a lot like the recent sell signals in the market. They went sideways for a while. So we'll just keep an eye on this. There's your support level about 115.82, and pretty big resistance up here to 119.18. Should the stock market take another leg down, like I still suspect, again, convictions aren't ultra high, but that's the scenario I'm favoring now. If that happens, you'll probably see a spike up, a breakout, and a rally up there to 119.18. So if you trade Treasury bonds or bond futures, ZN or the 10-year bond futures, ZB or the 30-year bond futures, you can certainly wait for a breakout there to go long the 10-year and or the 30-year. Okay, and an update on the indexes. Not much since the post I got out this morning. I had to leave for an appointment, but obviously I'm back at my desk now. There it is. T2 hit almost a perfect tag there. Remember, on these trades I'm throwing out, kind of moved away from what I used to call official, unofficial trade. Trade idea is a trade idea. If I like it, I'm going to put it out there, and I'll let you know how much I like it. In other words, hey, I really like this one. I might, this is just me. I might put more into a trade that I really like, one that, if it's, again, if it wasn't worth sharing, I wouldn't put it out there. And so they're all trade ideas, and, it's all take them, pass on them. My job is just to show you what I'm seeing and where things are likely to go if those patterns play out, and then your job is to decide what to take and what to pass, and whether you want to complement or supplement your own trading and investing. All right, so there it is. And so what I was getting at is if I do T2 equals, that is an adjusted price target when I put the equal sign in, if you've used the site for a while. So in other words, I was targeting the bottom of this area, 360.56 to 361.83. Those are the two lines as the target zone, and saying that I was targeting around the 361 level, and that's almost exactly what we hit yesterday. Close, what is that low was about 360.93, yeah. So 361 was the target I was calling for, audibly in the videos, and that was what was hit within 7 cents on a 360-point security. So close enough for government work. Very objective place to reverse to go long, ride out the 2.5% bounce, right back to that preferred target, my minimum target, which was the bottom of T1, 369.50. Again, if you're even though we hit it in pre-market there. The high was 369.54, so 4 cents off. Again, close enough for government work on a 369 point security. That's virtually a perfect tag. These candles, as I mentioned this morning, by the way, the white is the pre-market after hours session, and then pre-market right here. So it was hitting pre-market. These are what I call erroneous candles. Funny how I always see these on this trading platform, and they always go to where I had that gap right there. There's the top of the gap. They always go to a technical level, significant level. That again was the alternative, and still is potentially an alternative target. A gap backfill. Gaps love to be backfilled, and sometimes it's all the better if you don't leave any unfinished business behind, getting backfilled and moved on down. So that's kind of where I'm at. That was if you want to put the odds in your favor, you either book profits there or you tighten up stops, trail up stops, whatever you want. But that's still a possibility. And I'm going to put the line right where the gap is. This is that last candle right here is where we close. So the gap is somewhere around 370, 342. Now here's the thing. I keep saying in the updates that that second and potential final target, you'd want to sell just shy of the gap. Why? Because if all eyes are looking at that gap right there, there's a good chance a lot of nervous longs that want to get out of there, that felt trapped in on this move down, they want out, and shorts want in. So I'm not going to try to squeeze out the last 10 cents or 5 cents or last penny on a move like that. So I like to, unload longs and short a little bit early, just shy of that level where everyone else is watching. But as I said, that was a preferred level because, this gap was pretty impulsive, and I think what it's going to serve to do is trap a lot of longs, and they want out, and so I don't think it's going to give them that gap backfill. So it's still a possibility, and I don't mean to be wishy-washy. And look, it's only if you sold your longs here in reversed, you're only talking a move of about 1%. So you got to make the decision. Do you want to try to milk out that extra 1%, if that's your plan, of course, or just go sell out here? And again, that one happened early in the morning, about 5 a.m. And that brings a great point I want to bring up, and I'm going to go off on a few tangents here, but I wanted to mention this. Okay, let me see if I can put this in dark mode here. Okay, there it is. You can see it a little bit better. Let me zoom in. All right, couple things. Number one, as I've been trying to make a point to go in here and catch up on comments and questions under the front page posts. And sometimes it might be 2-3 days. If something else got popped up in there and I missed it the first time, I'll come back. This one I just answered today. The question was earlier. Somebody asked, how do you play positions when you're out of town? I was in Everglades yesterday and didn't have service while the market had a big drop. Do you exit positions? Blah, blah, blah. This to me, and I've talked about this over the years, but it is probably, to me, the best invention in trading since sliced bread. I mean, literally the best advance in trading probably since internet online trades, and that is the OCO order. It's also known as OCA, and it's very simple. One cancels the other. They are great. They're a must if you're going to have positions on and you're not going to be at your desk. If you're going to be out of town for the day, depending on what the position is, even if you have to run out to an doctor's appointment or something, and you're going to be gone a couple hours, again, depending on what you're trading. But if you're going to be away from your desk for a few days, great. And I recommend them even for traders that are at your desk because they give discipline. And what it is OCO, one cancels the other. Some brokers call them OCA, one cancels another, and it's just as it sounds. You buy a stock, let's say you go long XYZ at $10, your price target is $13, and your stop loss is $9, right? Simple stuff, right? 3-to-1 RR there. So you bought it at 10 right here. You're shooting for 13 as your price target, and you want a stop loss if it drops below 9. So once you buy the stock, you turn around, you put an OCO order, and you have on top, you have a sell limit order. I'm trying to draw out here. This is not the best. Sell limit. at 13, and then a stop loss. I didn't mean to use the same letters here, but that's a stop loss, or we'll do STP. Let's see if I could spell it out better. And at $9. Now you want to do this good to cancel when you place any order on a stock trade. The default with most brokers is a day order, if you haven't configured your trading platform otherwise. But you want to go in and select that good to cancel, especially if you're going to be away from the desk for a few days, and that will leave this on. So what happens, you have a standing order. Only one of two things can happen from that point. The stock's either going to go up, hit $13, you make your 30%, and you're automatically going to sell out. It'll sell you out, and then it will cancel that order, so you don't have that order hanging. Because if you don't do an OCO and you put a stop loss order, even if your broker is going to let you do both, and then you put a sell limit order, one gets hit, you forget the other one's there, and that other one may execute later on. So, and of course, if the stock went down and it dropped 10% and hit $9, it's going to sell you out there, cut your losses for you automatically, and it'll cancel that order. So that's a tip, big benefit at trading. And all brokers, like I said, most brokers have that. If you don't know how to do them, just call your broker, and most of them will be able to walk you through it, or you can do a search on their site. Okay, and so just back to the markets, that's it. In a nutshell, I think there's a decent chance we stop there, but a fair chance, not great, but still worth mentioning, that we could go up and backfill that gap, maybe shoot above it. Sometimes you get a perfect gap backfill, sometimes they overshoot it and run the stops. Maybe there's a little momentum heading up into there, carries it over, and sometimes you reverse just shy. So again, if you think there's going to be an overshoot, but you're not, why try to squeeze all those pennies out? That's where you'd want to reverse a little shy of there. And so this is what I think will happen most likely. And I'm going to give you other trade ideas just in case I'm completely wrong. And this is, the best buying op in months and pull back on the road to new highs. I don't think that's the case. I think I've made pretty clear on that as to why, but that's it. And today's just consolidation. So if you're getting impatient, antsy, because you're long or short, nothing goes forever. We had a big drop. The markets got very oversold. They're going to take a breather. That's usually the case after a big, especially a drop like we had yesterday. All right, enough on that. SPY. We'll move on to the other ideas here in a second. First mentioned that SPY was at T4, but at that time yesterday, QQQ was still a little shy of my final target there, which was T2, and so that's why SPY carried through. And this is again why I say look at all of these. The four big ones I watch when trading the indexes, even though I'm trading the Qs primarily, you get a little more juice or bang for your buck because it's a little more. It's tech heavy, not as diversified as the S&P. So I like, if I'm right on the markets, QQQ is typically going to go up more than SPY, in a trend during, weeks or months in a bull or bear trend, and it's also going to usually fall more. All right, with some exceptions. I'll try to point those out when I think those exceptions will happen. That's usually when the financials or another sector is really going to come down hard. That QQQ hardly has really no exposure to financials virtually. All right, SPY. So that's it. We overshot, but at the same time, that's when QQQ hit that level. That was a good time to go reverse, and there was a bounce target hit. That was T3. We came up and we hit the top of that zone right there. Again, that was in pre-market, and that was, again, this right here is a false candle right there. And that was about the high right there, up to about that 438 level. And so far, pulling back. If we do get another leg up in QQQ, it's going to coincide with a leg up to SPY. The gap is just below. Remember my T2 level back here, 441.48. Was right there, and you can see the gap. Well, the gap is right around that level, so again, you'd want to step in a little early if you plan to short there. Additional targets, and I think I already gave you targets on both SPY. Longer term targets, 424.45, and I think we come down here to that 411-ish area in the 200-day moving averages. We haven't tested those 200-day moving averages in a while, and that's where they're at right here. They're going to start to roll down. So that is keep it very simple for you. If you want to swing trade right now and you don't want to try to worry about all these little micro dips and rips that I talk about, then that's where you want to target. And there's the 200 days on QQQ and some pretty nice price support there at about 343.50. So if you want to hold out for a little bit more, like I said, another 6% or so, that's where I think we're going at minimum. Okay, in VXX, you had an opportunity to exit at T1 yesterday, and went a little bit above there when SPY carried through until right when that's when QQQ hit that final near-term target T2, and that's where we reversed. So if you were able to, sidestep any of the give back so far, that's about a 12% give back. You'd be recycling in, as I said yesterday, if you wanted to book profits there. Logical pullback targets on VXX would be the gap, yesterday's gap. That means the bottom. You zoom in real tight, the bottom of that candle, and that's exactly where we went today. So that's your re-entry point right there. That's where I did it today. If we backfill the gaps in the indexes, then we're probably going to backfill the gap on VIX. The VIX is almost like looking at SPY and QQQ in reverse. And it's still my preferred scenario. Run up here at about 34.87-ish, then 42.33. Those are your next targets. And crude oil. Crude oil, as expected, it's highly correlated with the stock market, ebbs and flows with the market because if the market's going down, that's expectations of, diminished expectations of future growth. Hence, logically, one would think diminished expectations of future demand for crude oil, and vice versa. Market goes up, it's going to be bullish for crude oil. There are times they'll do their own thing, but that's for the most part. And you can look back 100 years, well, maybe not 100 years, but as long as you want to find charts with crude oil in the stock market, and you'll see that relationship. There's where I think we're going. This is a long-term trend line. This is a 6-month chart. Recently, I've been focusing a lot on the 60-minute chart, but these are 2-hour candles, 6 months of trading history. There's a trend line. This was what I believe to be a major top in crude. I'll get to that chart in a second. The long-term chart, divergent high, and we've been zigzagging lower since. Yesterday we dropped along with the market, pretty good drop in crude, and we bounced from there. When the market bottomed again, you zoom in. This is just simple stuff. To be bullish yesterday at those support levels for a bounce trade would be to be bullish for crude, and that's what happened. We popped up, but this is support right now, 70.23. You can see I have quite a bit of reactions there to focus on, and that's the level it needs to go. That's the level I think will go. But if you're waiting to short or add to a short in crude, you want to see that get taken out, and get taken out with conviction. You see little pops there, those little white lines, those are the candlestick shadows. When they're down, the shadows are down below, you call them tails, and that just means intra-period you drop, but you snap back up. So we've had a lot of defense of this level recently, about give or take 70.23. Boom, that should do the trick. My next targets would be about 65.15. You know what? Lines just went away, blanked out. Hold on one second. Okay, that 120-minute chart locked up on me. I'm going to go back to that in a second. Let me just show you the long-term chart on crude for those just catching up. This is, to me, a big level up here at about 70. I forget what it was, 76. I'd have to zoom in on there. And, again, that's where I think we'll see a significant top. And so far, I can't call it a significant top so far, but it's been big support in the past, going back to 2011. This is a long-term chart. Broke it right there, and that put us in a big bear market in crude oil. We had a bull market back in from 2016 to 2018, and it kissed that level to the button and failed there. Bear market again, big bear market in fact, and recovered and all the way back to it. So that was the objective short entry. We're still below it. This is a long-term chart. Again, we're looking at a weekly or daily chart of crude, but going back into 2011. Let's see if I can get that other chart up for you. Okay, I had to reboot that program. That's booting up right now. I'm going to just show you natural gas as well. So there again is the case for major top on crude, not just because we hit resistance, of course. I would never think we're going to see a major top, but because we had these negative divergences. Last time we had negative divergence was there, and don't underestimate. These were all double-digit drops, each and every one of them. There was negative divergence, that's the case there. Natural gas also had a similar setup here. I'm going to show you the chart right now. This is the weekly chart of NG or natural gas futures, and a similar thing, comparable long-term resistance level right there. That was our last major reaction high, and we had some others there. Sometimes you pop it. Natural gas is a whippy little sucker. It moves tremendous swings in price, and sometimes you have momentum overshoots, but there's enough reactions there, and even one from above to make it valid. We popped it recently, but I told you I suspected it would probably be a momentum-fueled overshoot because we had a near vertical, trend going, and that's what happens. Natural gas tends to do that. That's what I call a trendy little sucker. This thing does have its periods of consolidation, but when it wants to move, quite often it's either in free fall, down, down, down every day, 3, 5, 10% sometimes a day, for days or even weeks on end. And likewise, you hit the up button and it's heading straight up. So we overshot it there. So you might want to give it some room, and we're now, it doesn't look like it here because that line's right about where we are, 499. This is an end of day chart. Stock charts only will update this end of day, and I can tell you right now we're trading at 4839 on natural gas futures, so we're a little bit below there. We're almost to what I want to see, and that would be a break of this trend line for an even more powerful sell signal. There's your uptrend line right there. That's also the target on the 60-minute chart. Let me cue that up for you. CNG, I got it down here somewhere. Let's see, right here. All right, so that was it on the 60-minute chart. We had this uptrend line, which was recently broken, and that gave us a sell signal there, or an additional sell signal if you didn't short it back here. That was the last short entry. And boom, sell signal there, and it's been stair-stepping lower. And you can see I still think we're coming down to this trend line here on the 60-minute chart right there. But do have a target where I think we're going to bounce. My first target here is about 456.60. Or 4.566. So you want to cover a little bit above that, or hold out and see if you can get down to this trend line. Now, sometimes you hit them both together. What I mean by that is, if we go straight down, we're going to have to pass through that level. But if we back test this level here, bounce a little and zigzag and work our way down, and this line comes up higher and higher every day, we may hit it down there. But I think we'll get there sooner than later is my guess on that gas. So the very least, still a little more downside to go from where we are to that 4566 target, about another 5% drop, and then maybe double that down to the trend line. Okay, when that CL chart froze up on me, it deleted, lost some of those trend lines. Sometimes they come back on this platform, sometimes they're gone. I'm going to give you some levels. There's a closing bell for the market. Right there, 62.24-ish. That's certainly a support level. Probably get a bounce. Have one there at about 64.68. And again, don't forget this primary trend line right there. That's where I think we're going down to in crude. So those are your near-term swing targets. And again, we're at support right now. We've been flirting with support here last couple days at about 70, a little over 70 right there. So we need to take that out. So that's it. Take out the recent lows. Boom, boom. Or maybe hit that around the same time, that uptrend line, and that's 64.68. And again, for those of you that don't trade futures, I pointed out SCO, 2 times inverse crude oil, so 2 times short crude oil ETF. We've already hit our ETN. We already hit the first target, and it was laid out as a trade idea back here. Hit the first target, had a pullback, and here's my second and third target zones. And then for those of you that want to short natural gas but don't trade futures, I mentioned KOLD as the nat gas short ETN, and that one's up 42% just off the recent lows. So that would have been around with that, somewhere in here when that trend line broke on the 60-minute chart. There's a trend line to focus on. And that 58.18, I think that's a target right there. And I'll give you one more, although I really like to align any entries and exits on this with what I'm seeing on natural gas futures. That happens to be my preferred trading proxy, but there it is. A little gap right there, some resistance, and then after that you can see those levels there. Speaking of futures, I forgot to cover NQ and ES. I always, I know a lot of traders trade those. This, and by the way, the chart I've been posting in the last few days on NQ has been, I keep referring to it as the hourly chart, but it's 2-hour candles. So this is the, 2-hour or 120-minute candle chart of NQ. Same levels I showed yesterday. That was support there, target that coincided with that T2 on QQQ, and that's 14,771 and change. Hit that yesterday, bounced back. That's the scenario I had laid out. I had posted this first for a subscriber, and under one of the posts yesterday, he asked for an update on the NQ chart, and so I gave him this one showing that's where I'd cover long, go bounce up to that 15,131, and turn around and go short. And so far, that's what's happened. So that was the kickback. And again, it wasn't just random. That was nice. That was big time resistance there. There was a breakout on QQQ right there. Sent the index to new highs. And at this point, so far, it's proved to be a failed breakout, aka bear trap. So that has longer term bearish implications unless they can rally it back up under there. So, a back test would have been bullish if we could ran on up. But this was a failed breakout, ran back to that level, got rejected so far. As I said, we could have a little more upside, but to just keep this very simple for you, this should open the door for more selling if and when we take out pretty much yesterday's lows in ES and SPY, QQQ, because that would be that T2 level, and that would open the door to those next targets on the daily chart I gave you on QQQ and SPY, as well as this one here, about 14,435, we'll call it on NQ. And I'd have to revisit this target, but I have a line here at about 14,052. And there's ES. This is a 60-minute chart. That was that level we were at yesterday when SPY was at, I think it was T4, but we overshot briefly. Then QQQ and NQ hit my final near-term target right there, and that's what caused the bounce in SPY. Buyers stepped in, buy programs fired off. Shorts were covering and going long, and then we ran into resistance, which again, you don't see it here. That's why I was focusing on the QQQ and NQ charts yesterday, because that's where I think that's where my focus is, and I know a lot of traders actively, especially when there's market volatility, that's what they jump into. So that's where the turnaround occurred when QQQ and NQ bounced back to those bounce targets, which are resistance, and there we are, and we're back to support. We had a little overshoot of it there. But again, to be safe, you want to see yesterday's reaction low get taken out. And if so, that should open the door to the next leg down. Okay, I'm going to go through these quick, and because I just want to squeeze in the metals and just keep this one video. We're okay on time right now. All right, there's AMC uptrend line. There was big resistance right here at about 51.22. We hit that resistance zone several times, offering an objective short, but then a sell signal came on the breakdown of the trend line. Nothing but red sticks so far. What I think, or what I suspect will happen, what will likely happen, so far it's about 28% drop from that resistance zone, is if we do get another leg down, and it's pretty impulsive in the markets, so far all we had is just a pullback. Nothing to get excited about. If you're short, you caught some great. If you sidestepped it from being long, great. But it wasn't, relatively speaking, that big a drop. It was a little pullback in the markets. Not even a technical correction yet, which is correction is defined as a drop of 10% or more. Should we get a correction, especially impulsive selling, a couple more of those 3% down days back to back, what you're going to see is the brokers will start to call in, tighten up margin requirements. That's what they tend to do. And you've got this crowd, the GameStop/Reddit crowd, meme stocks, they're all margined out. We know that because we can look at margin interest charts, which I've covered recently. The retail trader as well as institutional traders are leveraged to the gills. It's been a relentless bull market, and it's rife with speculation. And so where I'm going, if we see that, and again, this is just an if and a conditional and how we might get to these targets if you think they're insanely aggressive, is you'll see the unwinding of the margin trade. And so the apes, they call themselves, that are still thinking AMC is going to the moon, even though it stopped going up months ago, they will be forced to sell, even if they have what they call diamond hands. That's their term for, don't let go. We're going to hold on and squeeze out all the institutions, blah, blah, blah. Well, by the way, I've said it for months now. There's been plenty of shares shortable at Interactive Brokers. I'm short the stock. I shorted it again here on the break recently. And it's green barred. That means that you have shares available to borrow. So there's, When I see a red or red bar, it means no shares available to Interactive Brokers. When I see dark green, it means no shares at the time, but there might be some coming up soon. When it's light green, it means short away, and they'll tell you how many they have. And why do I say that? Because it's, you don't want to be short. I mean, not that they, of course, they won't let you short the red or green, dark green bars, but if you're already short, that might be, hey, time to get out because there are not many shares around and a short squeeze is likely. And by the way, Interactive Brokers has historically had by far the best availability of hard to borrow shares. So I just want to point that out. All right, so, and then that would, of course, be the catalyst. You need to take out these recent lows right here, and that would be the catalyst down to these potential additional targets, all the way down to T5, which is down there around almost $9 a share. And so that would still be, well, let's just say you nailed, shorted around there at the recent bounce back to resistance, about 82% drop. Okay, and quickly, as bumpy as it's been in the gold trade lately, it's been both a swing trade and a long-term trade. A couple weeks back, in fact, well, it was almost a month ago on 8/31, I suggested a pairs trade, long gold, short palladium, and so as bumpy as gold has been, and it's down. I don't know, it might even be about where it was back then. The palladium short has more than made up for that, dropping about over 26% into yesterday's lows. So congrats if you caught that. And if you're a short-term active trader, keep in mind we're probably going to bounce here. This is a 60-minute chart. We have nice positive divergence here. I'm not crazy about this trend line, but I think it'll work. So I'll pop above that trend line for a counter trend trade. What does that mean? Well, if you're short, you might want to sidestep the give back, or if you want to look for a long bounce trade, that's one idea for you there. Targets, I'm just trying to look at this right now. I see about 190, a little shy of 192, about 190, 180, and then 211.15 potential snapback targets, and possibly all the way up here to that level. But again, long-term charts to me say this one's put in a major top, and we're going a lot lower in the coming months here on palladium. And then platinum I like even better. This is a 60-minute chart of platinum. PPLT is ETF. Even better, bigger divergence, positive divergence there. First target, that's 90.66. That's the actual resistance level. We're almost there now. Never mind. Wait for a breakout of that. And then 96.29. If we can get a little more traction going, let's see here. Yeah, I would say somewhere right around this level here. About 105 or so. So that's PPLT. Again, platinum ETF. We even have positive divergence here on the daily chart with it falling to just below or just above support around 83-ish, but it's not a hard level, so we might have pretty much hit that. Yeah, I'd say we pretty much came in about 84. Looks like that support level. So there's a couple trade ideas for you. And then gold. There's not much to say on gold. It's been floundering around. That's why my updates are at least bi-weekly now, if not daily. But we're just kind of still up in the top, or just above the top of the buy zone there on GLD. The mining stocks have held up too, and I still like the silver miners. I'm a little partial to those. I'm going to show you some of those real quick. Let's see here, mining ETFs. I'm just rifling through a few related charts. This is SILJ, the junior silver miners. Still has positive divergence here on the daily chart there. And we're just a little bit below, but hardly, just barely below that key 1273 support. Remember, it was resistance back here. Resistance again. We broke out. There's a breakout right there. Test, 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 test. Little dip, whipsaw, but we regained it. Whip down below. It's not a whipsaw yet, but if we regain it and can start walking away, bullish. So I have not written off the miners yet. Not crazy about the action, silver and gold lately, but still, again, it's all about being diversified, and these are just different trade ideas. SIL, silver, the metal still looks good. That's big support right there, about 2053. We're still holding it. There's still positive divergence in place on the indicators. GDXJ, the junior gold miners, positive divergence, same thing. GDX itself still at that long-term major support right here. There's a big support zone, and we're just a hair slightly below it. close enough on it that I'm going to say we're on that support still. We haven't given it up, at least not with conviction. And so there's still a chance that the miners can run. Obviously, a big market meltdown isn't going to help that because these are equities. There's silver miners ETF SIL, still positive divergence here, and still close enough to support. So they're hanging in there. Need to reverse and start to rally, and that would certainly help the case there. All right, what else did I have for you? I think that's it. Yeah, we'll just wrap it up here on the metals. There's that big 1777 level. As I pointed out, little break, big stop, clearing move, and we regained it right there. We had the same thing right back here, big stop, clearing move, impulsive drop, but we regained it. So it seems like, I don't know whether gold's being manipulated or what, but I'll tell you what, I've never seen so many false breakouts or breakdowns, and we're back to that level again. So metals, if they can power on through, but once again, this is where we were a few weeks ago. So we have to break that 1837. That's the top of a very big trading range. We're blocked in that range there, blocked in that range there. Big level. So this is kind of near term. There's still work to be done on the bullish case of gold, but if we can take out 1837 with conviction, longer term that should be bullish. Okay, we'll wrap it up here. This has been Randy Finney with the right side of the chart. Have a great day.